Hey everybody, welcome back to another video. So this is a direct follow-up video to the video I just made, which was called like questioning my trading plan or evaluating my trading plan, something like that. Well, I thought about it and this is what I came up with. I decided that I was going to switch to only needing 2 out of 4 higher time frame qualifiers instead of 3 out of 4. And if you want to know why I did that, you can see my last video. But at the end of the video, I started touching on something pretty important. I started touching on how it's just my relationship with losing that needs to change. I heard Adam Grimes talk about how when he would get into trades, he would expect for them to be losers. He'd expect them to be wrong until proven otherwise. And something about changing that expectation, expecting for trades to be losers, it helped him start taking better trades. Now it's been a while since I remember seeing him saying this, and I don't know all the context, but it's like a similar sentiment that I've heard. I think I've heard Paul Tudor Jones say a similar thing, and I've had a lot of people say to me recently, like, as traders, our job isn't to make money. And I accepted that as face value. Like, yeah, our job is to follow a process, but I was having a pretty hard time really grasping that. I would feel pretty bad about losers. And I'm getting a brand new original thought right now. When I look back at my anti-playbook, a lot of my losers right here, 1, 2, 3, 4 in a row, all trying to do the same thing. A lot of my losers, I'm trying to do the same thing over and over again, and maybe because I can't accept that the trade idea has failed. Here, try to get long, failed. Try to get long, failed. Tried to get long, and tried to get long again, failed. This was a great winner actually. That one was a good trade, good hold. Here, got long, but was uncomfortable holding, got out. A lot of my losers, right here, trying to get long, failed. Trying to get long, failed. A lot of my losers, here's a bunch. Try to get long, failed. Try to get long, failed. Long, failed. Long, fail. Long, succeed. Long, succeed. A lot of my trades, try to get short, fail. 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 A lot of my losers happen because it isn't actually the first loser that really screws me. It's the subsequent losers that really hurt me and screw me. This one I remember. This one was a painful one. We had our consolidation here, bar 42, 3, 4, pushes down against me, comes back. It's like a break and retest, and then goes down and ends up going much lower. But I moved my stop loss up too much. I should have kept it originally where it was, but I think I was just scared of it coming back and stopping me out after all these losers here. But I just got a little off topic. A lot of my problems stem from not being able to accept losers. And so now what I'm going to try and do is, like I have here in my plan, the first part of my plan is about risk management, by far the most important variable. Same risk every time, since I don't know which ones will win or lose. And then it says losses are okay, expect them, accept them. So I'm going to try and and handle my losses better. And if I can go into a trade, expecting for a lot of my trades to be losses and being a comfortable loser, it's like Tom Pugard says, the best loser wins. Jason Shapiro says a really similar thing. Jason Shapiro talks about how good he is at losing, and I think I just need to be a better loser. I'm kind of at this stage in my trading where I do feel like I should be talking a little bit more about psychology and the mental game, because I feel like I'm break even, and a lot of my losers and my mistakes come from these mental mistakes. So I have my higher time frame qualifiers and my lower time frame. It's pretty simple. Total confluence between the 4 higher time frame and the 2 lower, I should have 4 out of 6. Always I need 2 out of 2 for the lower, and for the higher I should always have 2 out of 4. I have a couple other rules here. On inside days, on inside day opens allow 5 to 30 minutes after open for price action to develop before acting, I'll say. Prior 1 day bars being consolidation is good. And then I'll just say being expansionary is, I'll just say is bad. I won't say is no bueno. I'll just say is bad. And then I have this one down here on big gaps where there is a lot of air present. I just said it says wait. Maybe I should put that up here though. I think I'll add this rule to my other rules. Wait. Price is I don't know. I thought I was just going to go straight through this and not edit it too much. So I'll just return it to what it was. I'll just keep that rule down here. Or where? Right here. Yeah, so when there's lots of air present, I just want to wait. No, I will put that up. I'll just say on big gaps, when there's a lot of air present, wait. 5 minutes to 30 minutes. When there's a lot of air present, allow 5 to 30 minutes for PA to develop. Then I have my disqualifiers, just signals that I should not be trading. Then I just have this, of course, reminder. Trading is sitting until there are pocket aces. Russell, my good friend Russell, he always says trading is waiting. Well, now I've made it an original phrase. Trading is sitting. So now I'm going to trademark it. And any traders that steal it, I'm coming after you. I'm going to sue you. Better not hear anybody else say trading is sitting. Obviously, I'm joking. But I don't know. Trading is waiting. Russell's like one of those lucky guys who just has discipline ingrained into him more than the average person. And I feel like people would say that about me. I was a pretty good student, but I'm also pretty impulsive in a lot of ways. So I don't know. When can I trade in or after a range? This is the big question, right? Well, it's simple. Wait for a break. Uh, Wait for a break and retest or consolidation at edge. Pocket ace moves happen outside ranges slash contraction, outside previous 1 day, 1 hour bars. And the thing is, contractions are usually a prerequisite for big moves. Today was a great example. We had our contraction and stuff here a little bit, but I mean, just look at the hourly. It's been going up. It's been so bullish, okay? And then made it this big, aggressive, strong leg up, pulled back to the 9. Another leg up, but not nearly as strong or as aggressive. Lots more wicks on top of the bars this time. Here, 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 here. I think in this leg up, really there was only a wick on the bar here right before the pullback. And I really just need to focus on the 1 hour. Like, the 1 hour is where the good trades come from. Okay? And maybe we need to say something here. Just say the 1 hour is where the good trades come from. The 1 hour is where the good trades come from, especially after a prior 1 day consolidation. Disqualifiers. I mean, do I really need this line here? If I don't think I need this line here. Maybe a better line would be something about inside previous 1 hour bar. Maybe if I do something here about not having any trades to occur. I hope you cannot hear that. There's a bunch of music playing in the background. I'll probably end this video soon just because of that. It's coming from another room in my apartment. The 1 hour, I'll say the 1 hour time frame is where Is breakout imminent? If not, wait. Prove in I like that. Inside previous 1 hour bar indicates chop. If breakout is imminent, is breakout imminent? If not, wait. That way it leaves the door open for me to trade inside a 1 hour bar, previous 1 hour bar. But if we're not going to break out, then I must wait. $5 minute, I think we can combine these two lines. And then I'll just bold these, because why not? So this way I'm shortening up my disqualifier list, so I'm just focusing on, am I inside the previous 1 hour bar? That indicates chop. And I'm not saying I can't trade inside. I'm just saying be extra cautious. The thing is, inside the prior 1 day bar, that's like time price action is fractal, right? So if we're inside the previous 1 day bar, yeah, there's going to be lots of times where it's not good to trade there, but and if we're outside the prior 1 day bar, I think that means it's just even better for trading price. But there's 6.5 hours of price action in the middle of a day. That equates to 1 to 7 hourly bars, but I guess 8 for me because I have it show the last 15 minutes after the 2 p.m. close. So there's 6.5 hours of market time in the day, 7 hourly bars. And so you can be inside the prior day and still get really great swings that happen outside the 1 hour bar. Today we had 2 great swings. This swing went from 40 points, from 40 down to zeros. So 40-point swing here. This one went from 22 up to, back up to the prior day's high. That's 52. So that's 30 points in 2 hours here and 2 hours here, or less than 2 hours for both trades. So I think there's a lot to unpack here that I could get into. This is a whole other video in itself, but just being able to let my trades ride, not interfering with my trades. If I get into this trade here, bar 19, to go short, and it immediately cracks my way, flushes down, I should just get off my screen and say, you know what? This trade's looking really good. The best trades go my way right from the beginning. This is going to work. I'm going to walk away until this, and I'll check 2 hours later. This trade here, I could, at 21, I could say, you know what? How long did it take to reach the prior day high, or just below the prior day high? From 24 up to 50, which is 50 is a good place, like a good psychological level to target. I like to target like 50s and like numbers that end in 50 and 00. I think like those levels act as magnets. So go from 20 up to 50, that'd be 28 points. Took 120. Took an hour to get up to there. So maybe I should just make it a rule. I can watch and monitor the trade, but after the trade goes my way, it breaks my way, it makes a move up. Like if I get in on bar 57 or 58 after this bar 59 where it breaks up this bar, at that point I can get long and just walk away. All right. Disqualifiers. Inside the previous 1 hour bar. I'm just automatically assuming that if we're inside the previous 1 hour bar, it's choppy. I think that's good. Futures data. I need to change this to just say need 2 out of 4. I'm going to need to change these notes. I'm going to work on this more after this video, but I captured the bulk of my work, editing this document, refining it, sharing my thoughts out loud. I think this is a really educational video, so I'm happy about that. And I think I put my thought process on display. So if you're one of those couple people that watch these and help me, I appreciate it a lot, and I'm really curious to hear your thoughts after this one. And even if I haven't ever heard from you, I'm still really curious to hear your thoughts. Like, I really want engagement. That's why I have my Discord in the description, my email in the description. I really just want to engage. So the good news is the bigger the channel gets, the more people there will be. And the good news is I have a really couple great people I talk to now who are super helpful. So you know who you are. Really appreciate you very much for watching and helping me. I'm curious to see what you think about this. So bringing it full circle, risk management, got to be the same every time. Got to expect the losses and accept them. The losses are okay. That mental game, just being okay with losses, that's going to be really important. Being much more skeptical for the disqualifiers. I feel like I just had too many before. So just switching it to like focusing on am I inside the 1 hour bar as the first disqualifier. I think that's going to be huge. I'm a day trader. Being outside the prior day range is really important, but there still are a lot of good trades that happen inside the prior day bar. Being inside the prior hour bar, though, that's much more likely where I'm going to get caught up, and the more I scramble, the more I try to do, the more I'm going to get hurt. And in fact, going through my anti-playbook, let's just look at how many of these losses were inside previous 1 hour bars. Yeah, getting short here, that would have been a great trade. It was breaking out of the 1 hour bar. The EMAs were bearish. We were below the open. Great short trade. 4 out of 4. Getting long here, though, doesn't look very good. Looks like we're inside this previous 1 hour bar. Bad place to be getting short. We're breaking it out above that bar. But we're inside the previous 1 hour bar. Bad place. Here, inside the previous 1 hour bar. Bad place. This was a win. And we were breaking up above this 1 hour bar. All these losses over here, though, we were inside the previous 1 hour bar. So this is actually a kind of a breakthrough right now, because I'm realizing, hey, a lot of my loss here was a win inside the previous 1 hour bar, but it's the opening day. We're above the opening level. It's an easy look left target the hot previous highs. It's only a 20-point move up. It's what I should have done today. This was a good trade. But then after that first trade, In the opening trade, it's always, you can get more follow through and push through. But these previous trades later, these were inside the 1 hour bar, but hey, I get lucky sometimes. Probably just shouldn't have taken those trades. Very rangy and choppy, but lots of wicks underneath. And I think the reason I got out so quick is because I knew this is not a good place to trade. Then of course I took some longs I shouldn't have taken because we're inside the previous 1 hour bar, and I lost. Those were good wins. Okay, I think is this today? No, this is last Thursday, April 17th, or 2 Thursdays ago. All these losses inside the previous 1 hour bar. Okay, and I'm shorting, and it looks like, hey, there's a wick on the top, but still inside the previous 1 hour bar. Not good. Smack in the middle of the previous 1 hour bar, or a little bit above, actually. Yeah, above at the top of the previous 1 hour bar. Not a good place to short when it looks like it's probably going to break out the other way, or at least come back and retest these highs before pushing down. And yeah, I had the 1 hour EMAs, and I was below the opening level, so I had 2 out of my 4 higher time frame confluence. But look what I didn't have. I didn't have 2 out of 2 lower time frame confluence. The 9 EMA was above the 21 EMA, so that would have kept me out of this, as if I could respect my plan. But what I hope I can do is just look at the 1 hour and say, this isn't good. Great long, breaking out above the 1 hour and the previous high of day. Here, bad fucking long. I was inside the previous 1 hour bar, and we were breaking below. We were breaking down pretty aggressively below the previous 2 1 hour bars. Bad place to be long. I think that's when I actually implemented. This was the day that caused me to implement the 1 hour bar rule. Then of course today, inside the previous 1 hour bar. Actually looking like it's going to break down below. So I think this is huge. Just focusing on are we inside the 1 hour bar? If a breakout is imminent, I want to say, like, is a breakout imminent in the direction we're biased towards, but I don't want this wording to take up more than one line. But like, this is such a big realization alone that, like, I feel like I don't even need these other disqualifiers. Like, maybe we could just delete this one. But okay, I'm gonna end this video here. Maybe I'll delete this one, maybe I won't. One sec. 10 seconds. Alright, I gotta end the video. Appreciate you watching. Peace.